Wide Web. Oh, okay. Yeah. I forgot about that. We would have. Hold on. Okay. So the best way to start, in my opinion, is to kind of give a brief background of anybody that's watching this. Is that you and I met on Facebook somehow? I don't know how we got connected. I still don't.
Like
No
most
idea.
people that we're friends with, it just happened.
Yeah, yeah, right. It's just the network of the www dot. Um, and so I saw you post something about SBA and things like that. And we've reached into the SBA world, whether it be through like Chase, which getting a line of credit and not realizing was actually through the SBA, which like blew my mind when I logged into an SBA portal with a loan that we took back in COVID era, just like scared to death. Let's go get a loan. And so, I saw you post something about that, and we were actually interestingly enough, we just kept getting offers on the merchant side, like, Stripe saying, or like even QuickBooks and PayPal, all these, they see the money that's coming in. They're like, hey, we'll lend you $500,000 for freaking $55,000. And so we just thought that was the normal thing. And so we would take it and pay it back in 12 months and then take it and then pay it back in 12 months. And it works for us because, we'll get into why we do this. But then I saw you and you're like, yeah, why do that when you can go 10 years and pay it back in 10 years? So give a little background about who you are to anybody that's watching this and exactly like
Yeah.
what your expertise is.
Okay. Yeah, I'll try not to belabor this or go too far, but basically, my name is Dan Kalis. My company's fully fundable. I've been in the business funding space since 2010. Was a refugee of the consumer mortgage industry leading up till then, ending in 2008/9. Um, and so I've just seen a lot. I've worked with a lot of different types of businesses and real estate investors, traditional small business owners, agencies, info product businesses, e-com, SaaS, all that, right? And I've evolved with a lot of different things that I've done over the years and got a really good understanding of how business credit and personal credit go into the equation. We can get into that a little bit about, you know, who's out there lending money, what is funding, what are they looking for, those sorts of categories. But, collectively, in either a direct origination or through partnerships, I mean, we've probably funded close to $100 million worth of funding, which by some measures is not a lot and by some is a lot. So I do have a pretty heavy focus lately in the past few years with SBA lending, as you mentioned. And, I kind of avoided it for a while because I thought the same thing that a lot of business owners think. That just sounds like a lot of paperwork, a lot of time, very intrusive, and for what? But I came to realize that, you know what? It's worth it. If you can do it, because there's really no other way. I want to back out when we get back into the conversation more. So I'm gonna tease anybody who's watching this to say we take a very different approach and a point of view as far as why a company, a small business should get funding, even if they don't feel they quote unquote need it. I have a lot
Right.
of people come to me and say, "Well, I'm good. I don't need funding," and I would say, "Well, let me give you some thoughts to ponder about whether that's really true or not," and we'll get to that in a minute. But yeah, we have people coming to us all the time, and it's like if you can get the most amount of money for the best rate with the longest payback term relative to what your revenue or profit is by far. Yes, you have to jump through some hoops, but kind of one way to look at it is when you have an SBA lender, underwriter scrutinizing your business, it's kind of like they're doing due diligence on your business. It's not the
Yeah.
same if you were to sell your company, but things are being uncovered that you didn't have to pay for that you would want resolved anyway. So
Right.
why not, right? And at Fully Fundable, we have a lot more than just SBA, but usually that's sort of the go-to because as opposed to raising private capital, which we'll talk about a little bit, you don't have to give up control, you don't have to give up equity. You pay the loan, you can pay it off. There's no prepayment penalties on SBA loans, and there's 1,200 SBA lenders in the country.
Yeah.
To know which one to go to would be really tough. I'm actually a broker, but there's no downside to working with me because the banks pay me, and
Right.
my clients have me as an advocate, somebody to sit there and keep things moving forward. Because yeah, I'll kind of just throw bankers under the bus here a little bit. We're entrepreneurs, right? Everybody that's listening to this is an
Sure.
entrepreneur. Well, bankers and a lot of W-2 employees, oftentimes, especially bankers, they work bankers hours. And they sometimes will take 3 days to do what an entrepreneur would accomplish in 3 hours.
No,
And
absolutely.
so they have a stack of paperwork. they're on salary. They're not necessarily motivated to move fast. If they see something they don't like that's going to make their job harder, guess what? Bottom of the pile. And
Yeah.
that's why things drag on and take a long time. So we can get into more details of that, but I do shorter term loans. We do real estate loans for self-employed borrowers, which is hard to get conventional loans, real estate investors, really a holistic approach. And we're also working on right now some things that we can do that is very unique. No banks are going to offer this. No loan brokers are really going to offer this. Is doing an assessment of where you're kind of at before you need funding. Because if you wait till you absolutely need it and it's urgent, it's going to be kind of too late. I mean,
Hmm.
you'll still be able to get something, but you won't be prepared for it. So we're really doing some pre-flight assessments and consulting with that as well. But and I could go a lot of different directions, but that's the general.
Yeah.
So
Yeah. Sweet. And so, one thing that a lot of and I come from a old school Italian family, so or my father is Italian, and so one of the things was like, you should never have debt, and like ever in a million years. Yes, if you want to buy a property, but pay it off as quickly as possible. Like my father owns a bunch of properties, and out of the 12 buildings he owns, he only has a mortgage on two,
mhm.
right? And so it's like, what's the opportunity cost? Knew that was going to happen.
Debt equity, right?
It's
Yeah.
actually my father, funny enough.
He's like, I see you.
Unbelievable. And so, good debt versus bad debt, right? So let's spend
Yeah.
30 seconds to a minute chat about that, because I think a lot people hear debt and they're like, no, I don't want to owe anybody money, but what are you actually giving up by not getting it?
Yeah, well, that's a great question. I can't do it full justice in 30 seconds, but I'll try. I
Yeah,
mean,
okay. A minute.
it's kind of consumer debt versus business debt, right? Consumer debt really
Correct.
only makes sense if you are very responsible and you're trying to get some sort of rewards out of it. Fine, then do
Yeah.
that. But business debt gives you leverage, meaning you get to control a lot with a little, right? You get to control $1 million property with 20,000, $200,000 or something like
Yeah.
that. When it comes to businesses, though, you get to do more sooner, right? You don't have to pass up opportunities. One way I phrase this is it's almost kind of like having a financial time machine. You're kind of manipulating the time value of money because with SBA, you essentially can access up to 5 years of your future profits today.
Hmm.
So what would you do with the money today versus later? Now, if you're super old school, you're like, I like the peace of mind of not having any debt. I don't want any, that is a very old school, old world mentality, and I respect it, and I wouldn't try to convince somebody against that.
Sure.
But if you're entrepreneurial and you have the skills and resources to multiply capital, the yield that you will get by borrowing money, or if you get it through equity, is like 10 times greater, get to your goal, maybe even infinitely. So
Yeah.
the short answer is that, and as long as you're responsible with it, and for those people who are working with you, agencies or even other direct businesses, if you can multiply capital through good marketing and advertising and sales and systems, and you're under the guidance or direction of somebody like you, James, or anybody in your team, or they're just really savvy in themselves, well, then you don't have that much to worry about because you can kind of market your way out of almost any problem. So the
Right.
chances of you borrowing money and then failing are way less than the little mom and pop, store that the owner that isn't entrepreneurial at all. If you're an entrepreneur, then think like an entrepreneur, leverage OPM, like real estate investors that are like the Robert Kiyosaki types.
Sure. Yeah, exactly. Yeah. So do you want to talk a little bit about kind of like, like nobody really knows. You hear SBA, but I like even for me, like I didn't realize that I could have gone that route, right? Like there's no advertisements about it. You don't watch a commercial about it. You see all the other ones, right? All the I guess it's brokerages that would be running and they're all getting, but they're all reaching into the government for the money. And
Yeah.
I
So if you want me to
so let's
explain the dynamic of where the
yeah,
SBA
yeah,
is,
because I think it's important because I think a lot of people, they get the flyers in the mail, right? You start a business and all of a sudden you're getting swish funding flyers and all these other things. Um, and then you're going to get charged probably an arm and a leg for it, or you don't think you're going to, even get approved. So let's talk about some minimums when it comes to SBA, what they're looking for,
yeah.
and things like that.
Yeah, and by the way, the only ads I've ever seen for any kind of lenders for business is On Deck Capital, which you might even see like during the Super Bowl or something. They spend a lot of money. They don't do SBA loans, they do shorter term bridge loans. and we can do that kind of stuff for sure. And we'll touch on it a little bit. But yeah, Small Business Administration, federal agency of the government, been doing issuing loan. They're not the ones that issue loans, but have been guaranteeing. It's not even really insurance loans for, I don't even know the exact time. I should know how long it's been, but I think it's been about 20 or 30 years. It took a long time to really get traction, but essentially they empower banks and lenders and non-bank lenders to write loans according to their guidelines, as long as you, just like with if it was a Fannie Mae or Freddie Mae mortgage,
Hmm.
as long as you follow their 500-page guidebook,
Right.
it literally is called the SOP, Standard Operating Procedures, then they will guarantee 70, 80% of the loan. If it defaults, the federal government will come in and pay. So it gives the banks an incentive to issue money where they ordinarily wouldn't do it on that level of terms. And since you have 10 years to pay every SBA loan, there are some things that are the same with every SBA loan, no matter what. If it doesn't contain commercial real estate, it's 10-year term, 120
Hmm.
months, no prepayment penalty. You would be hard pressed to find any other non-SBA business loan program that even comes close to 10 years, maybe three, in very low circumstances, maybe five. But usually it's 12 months, 15 months.
Yeah.
If you're buying commercial real estate and it's owner occupied, at least 51%. So if you have
Yep.
a standalone building or whatever, then you get 25 years. If the real commercial real estate is at least 51% of the loan and you're getting working capital. So that's pretty awesome that you get that amount of time. And the rates are reasonable. It's like prime rate, which currently is 7.5. When I started doing SBA in early 2022, prime rate was like 4. So we know it's
Hmm.
come up over the past few years. And then it's a spread of either something like 2.75 to 3.75. So we're at 10, 11%, which might sound high, but here's something I would have anybody think about. A lot of your clients are marketing agencies, or maybe all of them, and you do that. If you're
Yep.
helping with, say, advertising, what's the goal, right? Cost per acquisition for the client, cost per acquisition. What's the lifetime value? It's an arbitrage, right? Return
Hmm.
on ad spend, ROAS. And you have to look at it the same way. Well, if you're borrowing money, don't think of it like, what is my mortgage is at 3% on my house. Well, you can't compare that. That's a secured loan where if you
Right.
don't pay it, they're going to
Collateral.
take your house away. These are mostly unsecured. So if you're paying 10%, the question is, do you have the skills and opportunities and resources to multiply that borrowed capital more than 10%? And the
Right.
answer better be yes if you're an entrepreneur, through marketing and sales, through staffing, key hires, technology, right? People brag all the time about, oh man, we're getting 7 to 10x ROAS. Like, okay, well then, if you were using other people's money and preserving your own cash, because cash is king, right? Liquidity.
Yep.
We'll get to that in a second. Your yield, like if you think like a private equity company, they'll take over a company with cash that they raised, and then they'll go put debt on the company
Of
so
course.
that they get
They
a
get their
really,
money back.
really, huh?
So they get their money back.
Right, but they get a really, really high cash on cash return because they're playing with the bank's money. Even though they have plenty of money, they still borrow money. Real estate investors do the same thing. Why don't small business owners think like that? Because they've never been taught to think like that. And it's
Hmm.
not that complicated. But let me ask you this too. Liquidity, cash reserves. Some of you might know Sam Ovens. I've never met him, but I know that he's quoted as saying to somebody that I am friends with, if you don't have at least $100,000 liquid in your business bank account, you can't even think straight,
No.
right? And so these people that I talk to a lot of times, they're sitting on 2, 3 months of cash reserves, and that's like one wrong move, and you're like getting desperate. So when you encounter a situation where you have something you want to spend money on in your business, hiring, marketing, and sales being the two biggest, you have a choice, right? You either have the cash to do everything that you want to do,
Hmm.
or you don't have it. And if you don't have it, but you could get it, either way, if you don't do anything, what happens? You lose momentum, you
Yeah.
lose enthusiasm, you miss opportunities. But sometimes you have the cash, but you're like, I don't want to deplete all my cash or a lot of it just because I have it. Why don't I go borrow 100,000 or 500,000 at a reasonable rate and then get a return on it and keep building up my cash reserves? To me, again, I'm not a financial advisor or a CPA, but I know how to read financial statements. I know how this kind of thing works. And it's just a different mindset of being proactive about leveraging and playing, playing with supplemental working capital, as I call it. So, anyway, I know
Yeah.
I went
Yeah.
beyond the question, but these are just things I think about a lot.
Yeah, and I could give kind of my own personal experiences when it comes to this kind of stuff. Like I mentioned earlier, we've taken merchant loans out, and the reason why is exactly what you said, right? we have liquidity and cash, right? Every month at the end of the month, was our profit? We distribute it between ourselves personally because I have a partner, Jason, and um, and then we leave a certain amount in there, right? I think we hold back 10% or something every month. And so it builds, but it builds slowly. And then it's like, all right, well, like 8 months ago, we spent like 50,000 with building a software that we're almost done with. And so we were hesitant to do that. So we almost said we weren't going to do it because we wanted to keep a certain amount of cash. Like you said, if it's less than 100,000, you cannot absolutely sleep at night. And so we're like, oh, let's dip into the merchant and let's say 250 grand, right? Well, we paid 31,000 and we had to pay it back within 18 months. So we were paying 15,000 a month for 18 months, which was fine, whatever, it just came out of the profits. But when you think about the flip side, if you go direct to the SBA, that would have been $6,600 a month instead of 15,000 or 18,000. I think it was more than 15,000. I think it was like 18,000. So, you know,
Well, let me speak to that because, yes, my go-to is always if I mean, there's other things too we can get into. Like, we have opportunities to help companies get grant money, but that's like long term. Like, you can't rely on that. That's going to come eventually, and that'll be sweet. And if you're interested in
yeah,
that, talk to us. But the SBA loans and again, the loan, these type of loans we're talking about are not with the SBA. They're backed by the SBA, so they're with different lenders that I work with. But if you're talking about a standard SBA 7A loan, that's going to be between, say, 250 and 500,000 is kind of the sweet spot. When you get over 500,000, then they start asking for personal collateral and you got to have them put the bank on the life insurance policy. That's the sweet spot I like to operate in. And you can get up to 500K within 60 days approximately if you have 95,000 or more in net profit on your tax return. There's another program that's very, very rare.
no, real quick, I want to just say that again. You could get up to $500,000 by just showing a minimum of 95,000 in profit.
Right. And so hence what I was saying, 5 years of future profits now.
Sure. Yeah.
What are you going to do with the money? Like, and you know what you would do, what you're
Yeah.
going to do. But but the thing is, that takes 60 days. There's another version where if you have reported a loss on your taxes or you wrote off a lot and you have very low profit, you can get up to 150,000. It's 30% of the top line revenue. And it takes maybe more like 30 days. You got to have a little bit better credit score, 700 plus. With the bigger loans, it's a lower credit score. But,
Ironically.
yeah. Well, no, it's because it's a riskier loan. The lower loan amounts are always riskier and default at a higher rate, and it's
That's
based on
interesting.
revenue, not profit. So they
Sure.
have to make up the criteria somewhere. But the thing is like it happens almost. I just posted about this on Facebook. Unfortunately, most businesses don't even think about this until they need it. They
Until
don't
they
know
need it.
ahead of time, and they go, "I don't have a lot of time to wait. I need money in a week. I need money in 2 weeks." Well, we can't do an SBA loan that fast,
Yeah.
so that's where the bridge loan that you mentioned comes in, and that's fine, right? I mean, even if you paid 30% for the money over 12 months or 15 months, again, can you multiply capital by at least 2x or 3x? I mean,
Right.
you shouldn't even hire somebody if you're not going to get at least a 3x return. What's the point?
Sure.
So it's still better than taking on a 30% equity partner and giving 30% distributions for
Just
life.
to get the cash. Yeah.
Right. So the SBA loan is the first go-to when it comes to debt, but then we have these other things as well. And sometimes you do a bridge loan now, so you get it within a few days, literally. Like, I mean, that's how fast it happens in very, very little documentation. It's remarkable. You could have pretty bad credit. So you exchange
Yeah. Yeah.
some
And you
fees
pay
of
for it.
whatever, but then you can get the SBA loan kind of at the same time over 30, 60 days, pay it off. And if you do those short-term loans, they have very, very generous early payoff discounts.
Hmm.
So there are benefits to that. Yeah, so that would be another thing I would say about that.
Yeah. Yeah. That's awesome. So what are some things? So let's somebody that's watching this, let's say their business is doing say 150,000 a year, and so there's small business, right? It's
Revenue
one
or,
it
or revenue or profit.
let's say revenue with, yeah, I know we just said 95,000 profit could get, but I want to be realistic to a lot of people that are watching this. So let's look at an agency that is profiting 60 grand a year. What
Mhm.
kind of thing can they, could they expect if they wanted to get a loan from the SBA, if anything?
Right. Well, let me just do a quick little calculator here because there's two ways to approach this. You could be, depending on your margins, you could be doing 300,000 a year in revenue and 60,000 profit. You could be
Hmm.
doing 3 million a year in revenue and 60,000 profit,
Yeah,
right?
of course. Yeah.
The difference is pretty stark. But so just as a general rule, if I was to say, like I said, 95,000, everything else being equal, right? Because there's other factors, will get you 500,000. 60,000 would be, if I'm doing my math right, yeah, maybe 400,000, three
I
fifty,
see.
four
I see
hundred.
what you're doing. Yeah. You're
Yeah.
just taking the profit, multiplying it by five, basically.
Dividing it by 0.15 because it's a
Oh,
1.15 debt service ratio, which I'm not even going to get into all that, but that's how they determine what you're putting on paper, what you're claiming as profits that can be verified by the IRS, is available to service the debt. Now, sometimes it might make more sense to do the revenue-based loan if you only need 150,000, but
right.
again, most times when you wouldn't be surprised to hear this, if I talk to somebody, they go, well, they asked for 150, 200,000. They go, you could probably qualify for 500,000. Could you put that to profitable and productive use in the next year? And they go, yeah, probably. Okay, well,
Hmm.
let's do it because on a $500,000 loan at today's rates, it's going to be about a payment of 6,900 something per month.
Hmm.
You can use the loan proceeds to make the payment until you recoup
All
that.
right. Get it
That's
going.
where you get infinite return because you're not even using your own money.
Yeah, exactly. And so I would say that a lot of agencies watching this now, they don't, it's interesting because, when I started this business, I was actually a teacher in a high school, and I started an agency on the side, and I did that for 4 years, side hustle. But I was doing hundreds of thousands of dollars on the side with my business. Never thought about SBA. Never knew this was even. I would have done it a long time ago. I would have grown a lot faster. And um, they don't think of themselves as a business. And so the interesting thing is, I started to look at like borrowing money with the mindset that banks, government, they put aside money and they need to lend it out, right? And so it's like you're not doing, nobody's doing anybody a favor. It's like they have the money, they need people to go and take that money, and that's why, like, I like to encourage people, business owners, like, if you can, like you said, multiply it, why not go and borrow it? And so talk a little bit about how much money the government puts aside, because I think that's what you said, right?
Well, the allocation to the SBA in terms of how much money they set aside in terms of like paying out defaulted loans, I don't know that number, but I do know that the SBA, I think in 2023, SBA lenders, we got to be careful. I'm saying that you're getting money from the lender, about 30 billion a year in loans, right? Through
Hmm.
SBA loans, which is incredible because and what I would say too is that at the bank level, if it's a depository bank, they're taking all their depository bank money, they're paying them whatever 3-4% savings. They need to put that money back out, and they can use fractional banking, and there's all sorts of other things
Yeah,
with
yeah.
that. They need to put that money. If it's a private lender that's a non-bank lender, they're raising capital from private investors, paying them money. Same thing. They have to put the money out there. Now, what's really interesting is I'm gonna speak to everybody as an agency owner now and switch gears a little bit because if you are selling to businesses, right, one of the objections that you're always going to get first is, I would love to hire you to help me with this marketing thing, this advertising thing, this system, but I just don't have the budget right now. But I believe that you would help me and I need it and I'm ready to grow. Well, the thing is that most B2B companies have not figured out yet that they should offer a resource of funding to their clients because think about this. We were talking about this before. If real estate agents, that whole industry, and car dealers, take two, didn't offer financing to their customers, how much less sales would they do?
Yeah,
They
of
probably
course.
do 20% of what they're doing right now. And they're
Yeah.
not even selling something that can make money back. So if you guys are selling services to help them grow their business and they ever tell you, look, I don't have the money right now, or I do, but if I spent this with you, it's going to deplete me. You say, great. Have you ever considered getting an SBA loan? It's not as hard as you think. And we have somebody who can really help you. They're an entrepreneur themselves, and you can get more than you think and easier than you think. And if you can't get that, there are other funding programs, and we will help you make sure that you make good use of this money. At the very least, as an agency owner or even a consultant or coach, you're going to like snuff out the objection of finance because sometimes that's
Yeah.
not really the objection, right?
Right.
Well, I just told you I could help you get the money. Well, I don't want to pay interest on it. Yeah, but you're still going to make back way more money. What's the real object? So it serves two purposes. If you're an agency and you want to work with me on that, like I do with James, then we can get your client's money to pay you. I mean, it's like
Yep.
no brainer. And at the very least, like I said, then it'll push away that objection and go, is it that you really don't trust us that we can do it? Or are you scared maybe? Sometimes, right? People are scared of success sometimes more than failure. Like, well, what if I do start getting 100 leads a week? I can't handle
Right.
that.
Right.
Right? So that's that. So yeah, the total amount, and that's the thing. 30 billion a year in SBA loans, and the top use of proceeds, top two are again, they are marketing, advertising, or staffing and hiring. And I would even sort of include in that an agency is kind of a form of that. So
Yep.
those two things, like that money is out there, right? You just have
Yep.
to plug people into that money to pay you with it.
Yeah, yeah, I love that. It's almost like an arbitrage. Like you get the objection of money's tight, and you could fix it and make a little bit of money, but fix it, and get paid with the proceeds of them getting a loan and then being able to invest in their own business with you as the agency. So I
Yeah,
feel like
and because at the end of the day, if you are, and I always say what we do is for growth-oriented businesses. If you're not a growth-oriented business, which I doubt any of your clients are not growth-oriented businesses, and non-growth oriented businesses don't hire agencies to help them. So I'm really not talking to any of those. So if you are, this is like the X factor, right? We talk about 10xing Dan Sullivan
Mhm.
or Grant Cardone, or pick your person that's talking about that. Acceleration. So I would say adding the fuel to the fire of adding supplemental working capital is like adding, creatine or rhodiola or whatever to your workouts.
Yep.
Because you might need supplemental working capital because you have a deficiency. That's like your multivitamins. But then there's
Mhm.
performance enhancing supplements, like I mentioned. Either way, it can help. And I always say that outside money will help to fuel and support growth because it's not just about fueling. James can help you guys generate way more clients. But then what happens? Well, now you need to hire more people. You need to bring in better tech. So the funding does both. It fuels and supports, two oars of the same thing.
Yeah, yeah. And let me give you an example of what somebody would an agency, like a real life example. So that was a great point. Like you said, it's like I could do the work, I could generate the leads, right? And I can get 3, 4, 5, 6 clients. But what ends up happening is now you're doing all the work yourself, right? So now you got to go hire. Now, who are you going to hire? So, there's a law of diminishing returns in every business. And one of the law of diminishing returns in an agency is you could have 5, 6 good paying clients, but you're still not making enough money to hire somebody like you, somebody good, right? Now, if you were able to hire somebody like you that could run they could handle 20 clients because that's the only thing that they could do. That is where you could use proceeds from a loan from like SBA to be able to grow faster, right? With profit and bring in more money to pay off and make an ROI on the money that you're using to hire. And that's where you can kind of break free of that law of diminishing returns in the agency world.
And again, yeah, maybe you have some cash, but it's like the minute that you deplete your cash, you get into stress mode. And I don't know about you, I prefer doing business and selling from a position of more peace. Some people like having their back against the wall. I don't think most people do, though. I don't think most people really thrive in that environment like that.
No, you
So yeah,
can't
it's
think.
just yeah, it's just a matter of and two, like if you're as an agency, it could be a matter of using this as a sales tool to get more clients in the first place. But also, you have clients again, if it's running ads, for example, and they're spending $10,000 a month on ads or whatever it is, and you're like, oh, this is working really well. We're getting like a 5x return, but we just don't have the cash flow. It's too tight to start scaling that up right now. But like, why not? So you go borrow 100, 200, 300,000. Now you all of a sudden go to 20,000, 30,000, 50,000, 100,000 a month. Now you may not get the same ROAS at scale, but
Mhm.
still, as long as you're profitable, that's the way that you do that. So it's good for your existing clients to go to the next level as well.
Yeah, I was I'll make another point to piggyback off that. So like if you look at like a towing company, um, I mean you can look at every company, but let's look at a towing company that because has happened before, where I'll give one example. One of our students landed a towing client. He had two trucks. He was a driver and the guy was a driver. He hires our student, he crushes it for him, but then the tow truck company's like, I can't handle anymore, so I don't want to use you anymore, right? Where it's like, and then I remember the conversation. The guy was like, well, I told him to get another truck and hire somebody else, and he told me he didn't have the money. Well, what better way to have the solution of like, well, dude, you're probably doing, 4, 5, 600,000 a year. You pay yourself. You got to pay the guy. You got to live your life. Now you could get a $500,000 to go buy a truck, two trucks, three trucks, so that you could take on the growth of the business. And that's where I think a lot of businesses fail because, well, we know for a fact, I think the majority of local businesses fail because they have a lack of capital, especially in the beginning.
Just run out
And
of oxygen. You can't breathe anymore.
yeah, and so this is a great solution for that. And
Well, and I've always used the analogy too. Like again, if you're mostly a marketing specialist and marketing and sales go hand in hand, obviously. But
yeah,
if you don't also provide sales support, at least to the full level, then you can, like you said, you can get in a situation where you're doing too well for them. And the example that I sometimes use that's kind of funny, but like whether it's say a dentist, which you probably don't work with dentists, but a dentist,
oh, I have, yeah,
yeah, like so you generate a lot of leads for the dentist, right? So what happens? Dental clinics and also towing companies don't have sales departments, right? So who's the salesperson? Debbie, the
secretary,
office manager,
yeah,
right? Well, does Debbie know how to? She's sweet. She's really organized. She keeps that business together, but she is not a salesperson. She is not going to know how to convert those people and keep them. So what happens is the dentist finally goes, yeah, maybe I should actually hire like a business development manager, but I'm gonna have to pay them six figures.
yep,
So, boom, there you go. Now you got the loan to do it.
exactly, 100%. Awesome.
Um,
So what for to answer some questions, I know a lot of people when they think about like, yeah, this is something that I would want to do or at least, go down that rabbit hole to see if I would qualify. Is there like a minimum credit score that, these loans like carry?
yeah, so let me start by saying that when it comes to lending in general, they call it the three C's of lending that can play into the equation. It's credit, credit, cash flow, and collateral. Now, there
Hmm.
are a lot of loans that do not require collateral that are unsecured, and that's
Right.
mostly what we're talking about. So then it comes down to what's the cash flow, and credit being mostly personal credit, but partially business. So I would say this: if it's for the SBA loan that goes up to 500K or even bigger, personal credit's a little less important, but it probably still needs to be at least in the mid to high 600s.
Hmm.
If you want to get the revenue-based one, if you reported a loss in your taxes, then you're going to have 700 plus credit. Now, we do have resources for really great credit repair companies if you need that, and there are lots of bad ones out there. So it's also reach out to me for that, and I can get you plugged in. On the bridge loans that we're talking about, you could have like a 500 credit score because it's not about that. You're going to pay more money, but it's not really an issue. And then, but on those, you probably need to be doing at least 20,000 a month in revenue to even be looked at.
Right. Get
And
anything,
there's
yeah.
one other option real quick that I just want to touch on. If somebody is, and this could be in addition to SBA and all these other things, or it could just be in lieu of it. If somebody's like so new in business or their revenues are really low still, but they have really good personal credit, we have a done for you business credit program that can
Hmm.
get you business credit cards, and that can go up to 150,000 in some cases. And again, I won't go into too much detail, but it's very discretionary. It doesn't even require financials. It's all stated. And that's a good way to build business credit and to access money that you can use for however you want. But again, you either have to have at least 20,000 a month in revenue and
Right.
or the high credit, but not necessarily both. So there's kind of an option for everything. And let me just real quick. There could be other things too. Like I said, we're very holistic. If you came from a corporate job and now you have your own business and you had a 401k and now you have a bunch of money in an IRA, Roth or traditional, a lot of people don't know this. There's something called ROBS, Rollover Business Startup. It's like a self-directed IRA. So you move the money from the IRA in like Schwab or Merrill Lynch into your own self-directed IRA. There's very specialty companies. You wouldn't even know them by name. You move the money over, and then you can invest the money into shares of your own company instead of it having to be Apple stock or bonds or whatever. It's really cool. And you can do it with real estate. You can do things that you couldn't do at a normal investment company. You could even buy gold and silver in this IRA. So that's one thing people don't really realize. And then we have all these other like little organic things that people just don't think of like, there's ways to tap your suppliers. There's ways, yeah, there's just organic strategies that sometimes are we can look at even before, taking on debt. But I'm not afraid of debt, obviously, and I'm an advocate of it if you handle it responsibly. But if somebody comes to me and they're just adamantly opposed to it. They're, Dave Ramsey
Yeah.
student, God bless him. But then, I'm not going to try to convince you otherwise. But if you want to amplify and accelerate what you're doing, then I would say, you know, go that route. And especially if you have somebody like James and his team able to guide you and you're not alone in it, and they're
Yeah.
gonna, they can't guarantee your success, but you're in way better shape if you're under their, guidance and leadership than if you're not.
Well said, Dan. Is there anything that else? Because I think everybody that's watched this has got a lot of good information. If somebody is interested in at least going, filling out a form or something that they can get in contact with you, I know we'll put it down below. But is there anything else you want to kind of end with?
Yeah. Oh, let me just also say one other thing that could be useful, and you start to hear a lot about this more now, is business acquisitions and expansion through acquisition. So if anybody here is interested in, but like you're an agency and you want to buy other agencies, SBA loans make up about 80% of the small business acquisition space. It's either that or seller financing or cash or some combination. There's really no other way, and that can go up to $5 million. So I won't get into all the details of what that entails, but just to say if that's of interest to you to do that or to buy even a non-agency, some other business, that's something that I'm really excited about working with people on and can help with the due diligence. So please, allow that to be a resource as well. I
Yeah,
would say,
absolutely.
yeah, James is gonna put a form on his website. What it is it's basically a funding assessment and inquiry form. I'm not going to ask for social security number or EIN. Not going to ask for a signature. This is not an application. It's just the basic information that I need to quickly look. I've been doing this so long, I can kind of figure out within 3 minutes what direction to go in. And if the only thing is, hey, well, you don't have enough revenue and your credit's not great, here's a credit repair. There's always something I can do of
Right.
value. And I would say, look, don't wait until you need funding and you're at the precipice of like going out of business. I mean, we can help you, but like you don't want to wait
Right.
that long. Make hay while it's what's the phrase? Make hay while it's raining. I don't know. Or
Something like
drink
that.
your well before you're thirsty, right? So
Yeah.
so you want to think ahead of time. And if you recognize that as a growth-oriented entrepreneur, it's not a matter of if, but when you're going to hit a financial constraint. You're going to need funding. You're going to need capital. And if you're prepared for it, it's going to make your life a lot easier. And I know it's hard to think long term when you're in the day to day, but if there's one thing to think long term about, this is it. It also exit planning, right? Eventually you're
Yeah.
going to sell your company whether you have to or you want to. So not that I necessarily do, we do some stuff with that, but like, that's one of those things where it's like, I don't want to, I'll wait until I'm ready I want to sell. Well, it's too late by then.
Yeah.
You want
Yeah.
to make sure that you do your taxes and your CPA, and I get involved with CPAs a lot to go, you may not want to write off as much because yeah, you pay less in taxes, but then you're less bankable. Your company has a lower valuation. Maybe you randomly picked some industry, NAICS code, NAICS, that's going to make you less bankable. Come to me before any of this stuff, and I'll help people assess where you're at, where you're at on that. You can reach me at dan@fullyfundable.com. You can go through but the form that I was talking about is the best way to go. And then James will know who I'm working with, and we'll collaborate all together and make everybody more successful, amplify and accelerate results.
That's it. I love it. All right, man. I appreciate your time, and we'll stay on for a few minutes. But yeah, the form will be below, and anybody has any questions, they can always reach out to me as well.
Looking
Thanks,
forward to
brother.
speaking with everyone. Thanks, James.
All right, man.
Let me stop this.